Hello and good afternoon. We are here with all the important topics right before the U.S. stock market rings the bell. BlackRock CEO Laurence Fink's compensation for 2023 was reported at $26.9 million, a decrease from $32.7 million in the previous year, according to regulatory filings. The reduction comes as Fink, who founded BlackRock in 1988, faces scrutiny from Bluebell Capital Partners, a London-based activist investor pushing for changes in the company's governance, particularly advocating for an independent chairman. Despite BlackRock's recommendation for shareholders to oppose this, the proposal highlights ongoing criticism of the firm's ESG practices. Fink's latest pay package contrasts with the increased compensation of other Wall Street leaders, despite BlackRock's profit rising by 6% and a 16% jump in assets under management in 2023. The move reflects broader tensions between corporate governance practices and investor expectations, especially in the realm of environmental, social, and governance issues. JPMorgan Chase announced a reorganization of its global banking division, merging its commercial, corporate, and investment banking groups under the leadership of Filippo Gori and Doug Petno. The move, detailed in a recent memo, aims to improve connectivity and service for the bank's growing and increasingly complex client base. Kevin Foley has been named the global head of capital markets, while Dorothy Blessing and Jay Horeen will serve as global co-heads of investment banking coverage. Anu Iyengar receives expanded responsibilities, now heading advisory services. This reorganization follows a series of executive shuffles earlier in the year, positioning JPMorgan to better address the needs of its clients across different sectors. The changes come ahead of the bank's first quarter earnings report, reflecting a strategic realignment to bolster its global banking and advisory services. Paramount stock experienced a notable drop following reports of exclusive merger talks with David Ellison's Skydance Media, just a day after a significant surge. Critics, including media mogul Barry Diller, question the timing of the merger discussions, suggesting that Paramount could instead focus on internal improvements. The talks follow Paramount's rejection of a $26 billion offer from Apollo, signaling potential strategic shifts for the company amidst financial challenges. Paramount has faced losses in its streaming business and declining linear TV revenue, prompting cost efficiency measures including layoffs and a surprise dividend cut. The deal with Skydance, which would involve merging with Paramount's production studio, is subject to approval by an independent committee of directors at Paramount. This move has sparked skepticism among analysts regarding its complexity and feasibility, especially in the context of Paramount's smaller market cap compared to giants like Disney and Netflix. This is all we have for you today. We are MEXEM TV, and we will be here next week, same place, same time. Goodbye.